Hey, how's it going? Aren't you looking good? This is Dapper Dividends. I'm Russ. Thanks for swinging on by the channel and investing a little bit of your time with me. We're going to look at the 7 stocks that we did buy for our brand spanking new Roth IRA. We just opened it up. We fully funded it for year 2020 here in the United States. You have until May 17th to either open or fund your Roth IRA for 2020. So make sure you stick around for the end of the video where I'll be updating the dividend giveaway and our watch hours. 7 stocks we do have in our fully funded Roth IRA for the year 2020, and there is no other company that I could have thought of starting with than Johnson & Johnson, which we bought 3 shares at $163.42. They currently pay $4.24 annual dividend for a starting yield of 2.59%, which added $12.72 of dividend income. Johnson & Johnson's first baby product was Johnson's Baby Powder, which they started producing in 1894. They have a forward dividend yield of 2.61% with an annual payout of $4.24. 44.33% forward payout ratio, 6.13% 5-year growth rate, and they have been growing that dividend for 58 years. Keep in mind that simply Wall Street uses a discounted cash flow model. In a nutshell, they are projecting all the company's earnings for about the next 10 years into the future and discounting that back to a price today. They do give Johnson & Johnson a fair value of $254.66, making it about 36% undervalued at its current price of $162.73. Next, we bought 5 shares of Kimberly-Clark at $129.15, currently paying $1.14 a year per share, at a starting yield of 3.53%. At $4.56 per share per year, that added $22.88 of dividend income. Did you know 1/4 of the world's population uses one of Kimberly-Clark's products every single day? They have a forward dividend yield of 3.42%, an annual payout of 4.56%, payout ratio of 61.47%, 5-year growth rate of a modest 4.9%, and they have been growing that dividend for 48 years. Simply Wall Street has a fair valuation of $190.53, making them about 30% undervalued at the current price of $133.32. We went for a nice yield next with Altria, ticker symbol MO, at 5 shares at $47.20, currently paying 86 cents a share, good for $3.44 a year. That was a starting yield of 7.29%. That is out of this world. Those 5 shares added $17.20 of dividend income. The name Altria is rooted in the Latin word altus, which means high and implies peak performance. A current forward yield of 7.20%, paying out that $3.44 annually. A payout ratio of 74.94%, but don't be worried by that. Altria historically has a high payout ratio as they don't want a lot of cash sitting around the company. They have a 5-year growth rate of a whopping 9.8%. and they have been growing that dividend for more than 13 years. Simply Wall Street has a fair valuation of $85.59, making them about 44% undervalued at the current price of $47.75. For our next company, we went across the pond for Unilever, ticker UL. It is an ADR, that's an American Depository Receipt. There is a very small fee paid on every share. You are receiving a receipt, and every share is a 1-to-1 ratio. We bought 5 shares at $56.60, good for $2.06 a year, for a very nice starting yield of 3.64%. That added $10.30 of dividend income. Unilever had been 2 companies, Unilever NV and Unilever PLC. On November 30th, 2020, Unilever NV was delisted because it was taken over by the parent company. They unified into one. I think a lot of people don't appreciate just how expansive Unilever is. They truly are a global company. You might want to stop the video right now so you can get a better look at some of the Unilever brands that I'm sure you're very familiar with. Now, the price did go up a little bit after I bought, so they have a current yield of 2.43% with a 48.12% payout ratio, only a 1.58% 5-year growth rate. Now, it does say that they have not been growing the dividend because they were just merged into the parent company, but as my main man, the European dividend growth investor, I strongly do suggest that you check out his stuff. Pointed out on his website that Unilever has been paying a dividend since 1929 that is interrupted through the war, and Simply Wall Street has a fair value of $56.43, which makes them about 4% overvalued at the current price of $58.72. After a bit of a sell-off, we were more than happy to pick up shares of Clorox. We started with just a tranche of 2 shares at $178.50. They do pay $1.11 per share per quarter, good for $4.44 annually. That was a starting yield of 2.49%, and that added $8.88 of dividend income. I find it interesting that there are so many brands that Clorox owns. Most people think bleach for Clorox, not the case. They own Casey Masterpiece, as you see here from the Chicago Tribune article, that they acquired them in 1986. With a current forward dividend yield of 2.43%, 54% payout ratio, and a 5-year growth rate of 7.59%, and Clorox has been growing that dividend for 19 years. Simply Wall Street has a fair valuation of $219.68, making them about 16.9% undervalued at the current price of $182.50. Number 6 on the list. This is an interesting one. I did a video about why I sold 3M. Little bit of trickery, little bit of clickbaitiness, but we sold out of the taxable account because I didn't want to divest some of the other funds that we're doing some things with. So because the dividends are taxable income on those shares of 3M inside of our brokerage account, the taxable brokerage account, we sold the shares, 10 of them, that were long-term shares, which means they are taxed at the long-term capital gains rate. We have held those shares for more than 1 year. We sold them, we took the cash and transferred it to our brand new Roth, and we bought the shares, 10 of them, right back at $198.90. Now, we did sell those at $199, even so we got them for about 10 cents per share cheaper, added $1.48 per quarter for $5.92 per year per share with a starting yield of 2.98%. That added $59.20 of dividend income. Next time you're driving at night and you see some really brightly lit reflective street signs, just think 3M, because 3M is the world's leading signage provider for both traffic safety and commercial messages. Current yield of 3%, payout ratio of 60.53%, 5-year growth rate for 3M of 7.7%, and a whopping dividend growth streak of 62 years. Simply Wall Street has a fair valuation of $208.46, making them about 5.4% undervalued at their current price of $197.14. And the 7th stock that we bought is a bit of a new kid on the block in the dividend world, in the REIT world, and it's one I've been wanting to jump into for a little bit, so I just decided to pull the trigger and jump in with an initial tranche of 2 shares of Innovative Industrial Properties, ticker IIPR. Now, we did buy those shares at $184 even, paying $1.32 per share every quarter, good for $5.28 per year. That had a very decent starting yield of 2.87%, and that added $10.56 of dividend income. One thing I'd like to mention about REITs is if you have the option, I strongly suggest holding them inside of a tax-advantaged account for the simple fact that you have to pay your ordinary income on those dividends. Those dividends do not receive any favorable tax treatment. Innovative Industrial Properties is the leading provider of real estate capital for the medical use cannabis industry. They have 67 properties across 17 United States with 5.8 million rentable square feet that is 100% leased with a whopping 16.7 year weighted average lease length. Forward dividend yield of 2.88%, 78.9% payout ratio. They do not have a 5-year growth rate because they have only been around since 2017. A 3-year dividend growth streak. And for the kicker, Simply Wall Street has a fair value of $521, making them about 64.9% undervalued at their current price of $183.13. One can only hope that their discounted cash flow model is spot on. And just like that, we're at $141.66 of annual dividend income coming into us that we will never have to pay taxes on ever again, pending they don't change any laws, because this is in the Roth. It's all post-tax money that's going in and funding that. If you missed the dividend giveaway video, check it out. All that it is I'm trying to get that final push over the hump. I need 4,000 hours of watch time in the last 12 months. I'm currently at 2,677. We're inching our way there. And as a token of my thanks to everybody that's donated and invested their time with me, I will be splitting 50-50 our first full month of YouTube monetization check with you. I'll give regular updates as the hours accrue and I get close to being monetized. We'll keep tabs on that, so please do hit the subscribe button so you can keep track of all that. Follow the link below and head over to gleam.com to enter for your chance to win 50% of our first full month YouTube monetization check. Follow me on Twitter at RustyRam78. Check me out on Instagram at Dapper Dividends. And as always, please leave a comment in the comments section below because you know where the comments go. We would love to talk to you, and I will talk to you in the next video.